Alrighty, hello everyone, and welcome back to TradeFinder Live. My name is Zach. I'm one of the team here at Elliott Wave Options. Most of you are likely familiar with me by now, but for any of those that might be new or joining us for the first time, welcome. It's great to have you on board with us. We have to go over some housekeeping details as a procedure for the session, and then we will get to the presentation with Mr. Rob Roy. So first and foremost, this is our live disclosure disclaimer agreement. If you've attended any of our live sessions previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We have this available on our website, so please feel free to read it in detail on there at any time, or take a screenshot of it now if you like, but that's the main point to take away from it. Just going to leave this slide up here for anyone that might need review on the Q&A process. Once we get to the Q&A process, just keep in mind it is limited. We always have so many great questions that come in, but we don't have enough time to ever get through all of them. And please just know that if we don't get to your question, it has nothing to do with the validity of the question. We just only have so much time in this session. So overall, that covers the housekeeping details. Before I introduce Rob, I'm just wondering about, credit card delinquencies surged in 2023, more than 50% as consumer debt is now at 17.5 trillion. And I just don't understand, how long can the consumer spend while still in debt? I'm trying to wrap my head around that, and hopefully Rob will be able to shed some insight on that. I'm sure he will. And I'm very excited to interact with you all. So thank you for joining us for this live session. And at this moment in time, the man of the hour, Mr. Rob Roy.
Hey, Zach, how are you?
Doing well, doing well. I will say I missed our intro song, but I know we're going to have one that's even better here soon.
Yeah, um, sure you'll handle that. And as you can see, back up in the mountains, and as usual, drove all night, so not much sleep. But it's a good thing. You don't need a lot of sleep, and you can go back and forth. But the heater's on. I don't know if it was a smart decision because I left 70 degrees and now I'm at in the 30s. It's at 38. So the heater's on. If I start to cough, I'll shut that off. But it's pretty cold right now. I think just in 10 days' time, I had some thinning of the blood there. All right, so let's take a look at the market. And surprisingly, we finished a little bit to the upside. And I say surprisingly because, as Zach mentioned, the economic news that came out this morning, I've been talking about this, and I think this kind of plays along into my thesis that we will have some sort of a recession. I'm not calling for a major recession, but I think it was not going to be the soft landing. I think we'll have a mild recession. And we wondered how long can the consumer spend? And it did seem like the consumer spent on the holiday season, but clearly from the data that was released today, it was all on credit cards. So how long can we do that? And with an increase by 50% on delinquencies, I don't think it's going to be too much longer. So at some point in time, the consumer is going to back off a bit, and that's when we'll find out what happens to the market from there. But yeah, that was kind of a $17.5 trillion. That's a lot of debt. We talk about the country's debt, and then you see that it's like, wow. All right, so let's take a look at the chart. As you can see, again, finished to the upside, holding that 10-day moving average, staying in that 45-degree angle. You couldn't ask for much more if you're bullish on the market. We just continue to shake off, shrug off poor economic news at some point in time. It seems like that's going to have an effect. So far, it has not. So crawling to the upside here. We had that label at 500. And I wanted to reference this because it was a comment on the U.S. market update that we do on the EWO channel on YouTube. If you haven't been there, please go there, register. We do that every weekend. And the question was, why do you keep showing this 4? We're not at a 4. Market keeps going higher. And I just want to, I feel like I say this a lot, but apparently it needs reiterating. This does not mean we're in a wave 4. This is saying right here, the colored numbers, when it's purple, when it's dark like this, and you can change the coloring here on the software, which is really cool. Purple is my favorite color, so I like making them purple. Those are confirmed waves, and then are completed waves, and then this light green tells you that's the current wave. So what this 4 is a projection that if we were to start the wave 4 right now, that's where you could expect to find some support. And if we came down here and found support now, that's where the wave 5 would be projected to go. As we continue up in the wave 3, these projections move. And we had, when we kind of relabeled into this wave 3 to the upside, we were looking at 500. So they've moved. You can see the bottom line is now 509, and that's what happens. That's how the algorithm works. So once we get to 500, that's a big round number on the SPY. I think we'll have to take a look again at things and see how they look from there. I thought I'd go ahead and bring up the weekly chart because a few weeks ago we had referenced Jeffrey Gundlach's comment of he thought we were going to have a double top because we were kind of at that point in time double topping from that high back in 2021 right through there. And as you can see, we've broken above that over the past few weeks. So that doesn't look like a double top to me. It looks like a continuation to the upside, although the wave 5 there is at 96%. We had a wave 4 at 55%, right in between that 50 and 61.8% fib levels, a very nicely formed wave 5 to the upside. Elliott Wave pattern. However, when you have a wave 4 in the 50 to 61.8% level, you're looking for 100% extension on the wave 5. We're almost there. Once we get there, then we have to figure out, are we going to have an extended wave 5? Or is that going to be it? Is that going to be the target price? We look for the DMI. Right now, the DMI looks pretty good. It looks supportive. But once we hit 500, we'll take another look at the DMI if in case we do get to 500. It's just making an assumption there. It seems like that's pretty likely now. You've all heard my analogy from Star Trek, the tractor beam effect. These big round numbers just seem to draw the security towards it. Doesn't have to be the market, can be an individual security. They just go towards these big round numbers. So continuing to move to the upside here on the SPY. Zach, as we get through this, I think we're going to have to change the name. The theme song name from the song remains the same to Hold On Loosely. And you'll see that as we start to look at some of the charts that are clinging on by the skin of their teeth. So taking a look at interest rates back to the downside today after a big move up higher yesterday. Interesting that rates went down today, but is it just gap filling? We got up, we tested that previous wave 4, we didn't break it, and we turned back at least for today. And we'll see if, pardon me, if that is just gap filling and rates turn to go back to the upside. I feel like it's just making an adjustment here from the Fed telling us, and if you missed it on Sunday, Chairman Powell said, hey, a rate cut in March is unlikely. Exactly what he said during the press conference, but it seems like the market ignored that. But then when he says it on 60 Minutes, then the market was like, oh no. And so that created some issues yesterday, at least on the open, and then we recovered. And then you can see what it did with rates yesterday, gapped up in rates, and then right back down. Again, to me, it was nothing new. He said it in the press conference following that 2-day Fed meeting, and yet, for whatever reason, it seemed to gather more traction from the financial talking heads than it did from his own press conference. But we didn't break above 42 here, so we'll have to wait and see if we're just filling this gap and then we're going to turn and go back to the upside. The economic data I don't think is quite strong enough, but it's not too far away either that if we do get to the point where we start being concerned about another Fed rate hike instead of cut, you'll see a lot of things change at that point in time. But again, we're not there yet. And so we just came down, hit the 10-day moving average on the low, kind of recovering a little bit from the gap up yesterday. So I wouldn't take too much into this downward move just yet. Let's see what happens in tomorrow's trade. Once we do fully fill that gap, do we continue lower, or do we just fill the gap and turn and go back to the upside and move this wave 4? It didn't even quite make it to the 38.2% fib level, so there's more room to go here on the wave 4. and still keep this potential downward move, which I do think at some point in the future, rates will go lower. We will get to the point where the Fed is indeed going to start cutting rates, but I think all that just got pushed out with the economic data, and I think the Fed is pretty happy with where things are. I don't think they want to do anything. I don't necessarily think they want to raise rates, but I don't think they want to cut them either. So I think they just want to continue to watch and see how things play out, and then they'll make their move from there. I'm not one that normally takes the Fed at their word, but I kind of am in this point. That's what they're saying they're going to do. They're going to watch data, but they always say that. But this time, I think they really mean it, if that makes any sense. Looking at the VIX, even though we had a little bit of a move up yesterday, right back down today, right back down here towards 13, and we just continue to bounce back and forth along this corridor here from 12 to 14, that range right through there. It was 12 to 13, and then one of the things that we noted is we're starting to build a little bit of a channel here where we're having some higher highs on the VIX and then also higher lows, but did we break that channel today? You can make an argument that that low on the VIX broke to the downside, but we did that also back here on the 23rd of January, and immediately the next day we were right back up. Are we going to do that again tomorrow? We'll wait and see. It was a pretty well formed trend line here, channel to the upside, just as we're just kind of creeping higher here on the VIX, again with the higher highs and higher lows. But maybe we broke it today. Again, we'll find out tomorrow when we see if there's a follow-through day. It works the same way on the VIX as it does on any sort of equity. If you break a major point of support, resistance, moving average, break out of a triangle, whatever, you're looking for that follow-through day. And so just thought I'd share that with you, that we did break that bottom trend line, just like we did back in January. So taking a look at the dollar, kind of bouncing back to the upside following Chairman Powell's comments. And gosh, I just cannot believe how many of these expanding triangles that we have now. It wasn't that long ago, you probably have heard me say this, but it wasn't that long ago that these were extremely rare. And then over the last year or two, there's been more than I can remember on these expanding triangles, which is the exact same thing of what you're used to on a triangle, which is normally called a contracting triangle, where the mouth is on the left side and the point's on the right side. When you have an expanding triangle, it's flipped over the other way. The point's on the left side and the mouth's on the right side. Either way, contracting or expanding triangle, it tends to lead towards a breakout. And look where we broke out to on the dollar, exactly to 61.8. So a little bit of a move back down today, perhaps on that economic data about the debt of the consumer, but the country is in a lot of debt as well, and countries around the world don't seem to be too concerned about it. They're still buying the dollar, they're still putting money into the dollar, moving to the upside. But is that going to be the end of it? If we start to move much higher here on the dollar, a couple things happen. One, this five-wave pattern will become disqualified, and the other thing is if we start moving a lot higher in the dollar, that means that there's likely a global recession going on around the world. And it also means that international companies are going to have to deal with the exchange rate issue, and that's going to hurt earnings. So we don't want the dollar to go too high. You've heard me say this before. We just want to stay in this range. We did that for a while. Now it looks like maybe we're trying to break out of it. We don't want to come up and test those highs around 107. Again, that will affect earnings. But we've got plenty of room down here to the downside without going too far back in the charts. 96 is the area that I've mentioned numerous times, is the area that I want to see the dollar hold. I don't want to see the dollar break that because that then means that perhaps other countries are losing faith in the US dollar. So we don't want that either. So it's kind of a threading the needle type of thing here with the dollar. So far, it's done that pretty well. And we'll see if we turn and head back to the downside on the dollar. We take a look at the Dow, the DIA, just churning ahead here, just very slowly, but it's not so bad. The slower you move to the upside, the weaker the corrections tend to be. That's why I like the 45-degree angle. This is kind of a little less than that. So it's more of a creep than it is a move in a 45-degree angle. I feel like there was some market rotation here towards the end of the year when we had this pretty vertical move here on the Dow. And that's a pretty good consolidation from there just to offset that and move just under a 45-degree angle. So perhaps those that wanted to move some money into the Dow, perhaps being concerned about some sort of a recession, et cetera, have done so. And we're just kind of creeping along as we go. Now, note again that the Dow or the DIA is in a wave three. The SPY was in a wave three, but when we look at the Qs, still in a wave five. Even though we've moved past the time of that tap box, as far as the time part, we're still hanging in there from a price standpoint. And if we look at the moving averages, the 10-day moving average coming down here, testing that 10-day moving average, you might have thought with rates going back down today that we would have moved higher in the Qs, but we didn't. So another reason why we have to change our song, because yesterday we kind of had a just a flat day, and the market was up, and then today rates come back down, and the market goes up. So kind of the market's not in tune with interest rates at this point in time. At least the Qs aren't, and those are the ones that are the most sensitive to it. You can see this, call it a 38.2% wave 4 correction. You're only supposed to get a 61.8% extension. That was right around the 420 level. We've broken above that and tested it. And as long as we maintain stance above the 10-day moving average, I think you can still be constructively bullish on the Qs. Maybe not as much as once were, but still moving to the upside there on the Qs. And then the Russell, we take a look at that. Just not much happening. But here's where the hold on loosely thing comes on. We have this 190 level that we want. If you're along the IWM, you want that 190 level to hold. It's been support, and 210 was resistance going back, and then we broke below it, and it was 170, 190. You all know the drill. And if we hold here at 190, perhaps we can make a run back up towards 210. But if we give up the 190 level with follow through, then we're looking all the way back down towards that 170 level. And so again, if you're along the IWM, or if you just watch the IWM, as a lot of people do, as an idea of the risk tolerance of the market, you don't want to see that break for that reason either, because it doesn't necessarily mean the S&P will go down. But if the appetite for risk is waning, then that could be a challenging thing for the S&P and the Dow. Another thing to point out is that that's a pretty decent looking zigzag to the downside setting up. And the 100% extension is right at 180, right smack in the middle of that range between 170 and 190. Remember, for a while, for a couple of months, we compressed the range and it was 170 to 180. So perhaps 180 can hold. I don't know. 170 is longer term support. So maybe we get a short term bounce off of 180 if we break below 190. So that's just all speculation. We have to do it first. And so far we haven't. So far we're holding that 190 level. We'll see if it can continue to do it. Taking a look at Bitcoin, it's just really kind of playing a little bit of ping pong here between 40,000 and 44,000. So we've held 40,000 so far right here. And we can't get above 44,000, at least not recently. We took one shot at it there in the middle of January and got turned back. And you can see that we've been bumping our head against it here for over a week now to see if we can break above that. I think if we break above 44,000 on Bitcoin, then we'll be off to the races up towards that 50,000 level or even higher, as some of the Bitcoin bulls are forecasting. They're in 60s if we can break above 44,000. But we have to do that first. And it's kind of a not so fast thing. Let's let it do it. It's the Missouri thing. Show me. It's got to break above it. We'll follow through first. And so far, other than that one attempt there, as I said, in the middle of January, it hasn't been able to do that, but certainly worth something keeping an eye on. Another hold on loosely here, Coinbase. And we talked about 120 and the need for 120 to hold. And look how it's trying. That was pretty spooky yesterday with a close below 120. We managed to get back up to it today, closing at 119.79. So call it 120. So we didn't get the follow through day to the downside. Look where that wave 4 is, right at the 61.8% fib level. But gosh, Zach, if we can't hold here, you know the drill, you know what's coming. That would be a bit of a Katie bar the door. Yep. Yeah, yeah, we have initials now. It's KBD now. It's not even Katie bar the door anymore. It's just KBD, so everybody knows what it is. But based on the fact that we had such a pretty quick move from 80 to 120 on the way up, there just isn't much to hold it on the way back down. And that's why it's just like fingernails on the edge of a cliff trying to hang on to that 120 level. I'll be watching this really closely tomorrow. If you're long Coinbase, this is a bit nerve wracking right here. Because again, that could be a pretty swift move lower if indeed we do that. But no follow through today. We'll see what happens tomorrow. Can we get back above and close back above that 120 level tomorrow? When we look at the 10-day moving average, you can see we are below the 10-day moving average. In fact, we're below all the three major moving averages that I put on the chart, the 10, 30, and 50. The 10 is a green line. The fuchsia line is the 30-day. And then that royal blue line is the 50-day. So can we hang on here? That's the next couple of days are going to tell us a lot. And I'm sure you've heard all the rhetoric that the new Bitcoin ETFs are going to be a problem for Coinbase. And maybe they're right. It's certainly come back down since they started trading. But as long as we can hold 120 here or right in this area, it's okay. If we break that fib level, and 61.8, in my opinion, is the strongest of all fib levels. If we break that again, I think we see 80 very quickly. So yeah, if you're long Coinbase, you're kind of biting your fingernails right now, saying, please hang on there. So yeah, the whole hold on loosely theme for tonight with all these stocks that are just really needing to hold these resistance points unless things are going to start to fall apart. So that's an idea of the markets. We just do Coinbase in conjunction with Bitcoin. Let's take a look at a few of the international markets, see what's happening with our friends down under in Australia. And as I've talked about over the last couple of weeks, they held where they needed to at 23. And now we just have to wait and see, can we get above 24? Note that it tried it and got turned back rather abruptly here, and that was on the 31st of January. So boom, right back down. And if we take all this stuff off, all these lines and the Elliott Wave off, you can see it's rough. It's not by any way, shape, or form the best looking triangle I've seen, but nonetheless, it is forming a bit of a symmetrical triangle. So I think the Aussie market is going to make some sort of a move here in the not too distant future. And as you know, if you've been listening, when you have these triangles, doesn't matter whether it's ascending, symmetrical, or descending, they can break either direction. And it looks like Australia wants to do so. Let's wait and see which way it wants to go. Our friends up north in Canada, back down towards that 36 level, that needs to hold. So again, staying with the hold on loosely thing here, we're right there, and we need to hold that level. If not, if we break below 36, we're probably coming down to test that wave 4 low around the 35 level. And then that would be I guess I'm going to go with your abbreviation now, Zach. That would be a KBD if we don't hold 35 on the EWC, because then we're likely coming back down towards 32. Again, a pretty swift move to the upside here from October through the middle of December. and that means that there's just really nothing to stop it if it breaks below 35. But that's getting ahead of things. It tried to break below 36 and got back above it today. So that's no harm, no foul on the break below it yesterday. But you would like to see some follow through tomorrow on the EWC. You'd like to see another up day to feel a little more comfortable that perhaps we can come up and test this 37 level again, if not try to break it and move up towards that wave 5 projection. But right now, it's kind of a wait and see thing, I think, on the EWC. Do we break below 36? Do we break up here and try to break above 37? Those are things that the market will tell us here over the next few trading days. Looking at Germany, the EWG, and just kind of doing nothing here over the past couple of weeks. Take the Elliott Wave pattern off here. And again, a bit of a triangle formation here as well. Maybe slightly better than what we saw on the EWA, but very similar. So it looks like globally something's getting ready to happen. These are kind of different charts than what we have on the SPY, where it looks like we're just on a march to 500. But these markets, the EWA and the EWG specifically, look like something significant's getting ready to happen there. And then India, where, man, it's a mixed bag on the financial networks. If you listen to them, they were talking back in here at the end of December, early January, that the INDA and the Nifty are priced for perfection and be careful, be cautious. And others are saying that's the place to be. You want to look for some place to put your money internationally, that's where you want to be. And that's hard to argue with because now we've broken above that wave 3 with that big move to the upside today. And we are now in a wave 5. So the wave 4 held at the 23.6% fib level. To me, that's the weakest of all fib levels, but nonetheless, it is a fib level and it held there. So we'll see if we can come up here and try to hit that 52 level. I would be really surprised if we don't. I don't know if it's going to happen in the next few days because we're a little bit overbought now with that move today on the INDA. Not too significant, but a little bit. And we'll see if that holds and we move up towards that wave 5 level there at 52. But you just have to continue to tip your hat to the market in India. It just continues to move higher. It's been doing it. It's been the place to be for over a year now. And aside from this, we labeled this before, so I won't do it again. We had the big run, then we had this really nice flat here with a complex C wave on the flat, perfect zigzag right there. Just textbook Elliott Wave Fibonacci stuff. If you're not familiar with the software, if you're watching TradeFinder for the first time, it's from the Hub organization, hubb.com. You can find out more about it there if you are interested. I was talking to somebody about this earlier today, that this is programmed exactly to the algorithm as Ralph Nelson Elliott himself wrote it. It's no one's personal adaptation of the algorithm, as some of the other Elliott Wave softwares that are out there are. So I like it. I think it's the best Elliott Wave software that exists on the market. I'm an Elliott Wave fan. I'm going to trade with whatever software I think is the best. And it's not just the fact that it is part of it, but it's not just the fact that it's programmed exactly as Elliott wrote it. It's working. It works. So you put those two things together and it makes sense. This is the software you want to use if you are a fan of Elliott Wave. But you can see what happened here. We broke above that resistance area at 50 and did it in a big way. Can we get follow through with this big move higher? That's going to be a question for the INDA tomorrow. It'll be really interesting to see how that plays out. And before we start looking at our past case study considerations, actually, let's go ahead and take a look at them. I left NVO on here last week. I'm not sure why. If you missed that move, that was our target. And you'll see it right there. This was the target, 112 to 115, and it continued to go higher. So now, if you didn't take it off before, now you're getting greedy. Okay, that's too vertical now. So you can see this big vertical move up. I don't like that. You're, you know, you just don't want to be that greedy if you're long this, to take those gains and be happy and move on. So we're going to close off NVO. It's no longer a case study consideration here that we would be monitoring. You've had two shots to get out with nice gains. We took the gain off on the first move, and then you got another shot here. So if you were late to the party, you had your second opportunity. But I just feel like, and look where we are, 138. So it's 138.2% fib extension. It's not a super strong fib level, but it is a fib level. We were right at the 61% wave 4 correction, that fib level, which is my favorite, as you know. So we had an extended wave 5. I just think that you're being really greedy if you continue here. Bulls make money, bears make money, pigs get slaughtered. You've heard that before. Yeah, I feel like, yeah, you're being a little greedy there if you're continuing to be in that one. So we won't be looking at that one again. Last week we looked at PFG. Didn't get off to a very good start here. If you go back and look, and I invite anyone that's newer to TradeFinder to go back and look at our previous history of case study considerations here on TradeFinder. They've been pretty darn accurate. But this one is going to test us a little bit here. We set the wave 4, so we came down and look where we went. How can people question why we look at Elliott Wave and Fibonacci? How many of these charts have been at exact Fibonacci levels? And so the 38.2% wave 4, nice move back to the upside today. We're going to have to get back above this level here at 79, though, to take a run towards that wave 5. So we could just be bouncing here from getting a little oversold there on the 1st of February. We got to get back above the 10-day moving average. We got to get back above 79 and fully fill that gap. And then we can feel a little bit more comfortable about this. A lot of the financials have been struggling a bit, and that's because rates went back to the upside after Chairman Powell's comments. Financial companies prefer lower rates, but when it really boils down to it, the financials make money off of the spread between, because they borrow short term. A lot of them use overnight lending facilities, and then they lend longer term. So the spread between the short and the long is where they make money. And as you know, with an inverted yield curve, that's pretty challenging for the financials. The yield curve was flattening out a bit, so that was helpful. And then here we go back up in rates again. And so now we're struggling a little bit in the financials. But if rates start to come back down, I think you'll see a bid return to the financials, and PFG could do well. But now it's got a little bit of resistance. It's got to get above that 79 level. So that's the only one that would be considered open when we look at it next week. And another thing I wanted to show you, here was a really nice trade alert for our subscribers at ewotrader.com. It was on our impulse or directionally based strategy on VEEV. And note that we made just under 50% in 0 days. And you wonder, how can you do that? And we've shown a couple of these in 0 days. So that just means the open and the close were less than 24 hours apart. So it goes on a 24-hour clock. So if we sent out the opening alert at 11 a.m. Eastern time and sent out the closing alert at 10 a.m. Eastern time, it'll show 0 days. If we sent it out at 11 a.m. Eastern time and then the close at noon, then it would show 1 day. But anytime you can make 50% in a day, you're pretty happy. So that was really nice. You saw the one that we did on Google. I just love that stock in conjunction with Elliott Wave. But the difference, if you're wondering, between what we do here at TradeFinder and our alert service at ewotrader.com, as at ewotrader.com, we send out alerts for entries, any adjustments, and exits. So we kind of hold your hand from start to finish, and we give you all this information along with commentary and a chart, so you can see the chart and the target. And then we send the same information out on the exit. So you get all the same stuff. And you can see that, boom, vertical move to the upside. Beautiful. That's what you want to see. We got a little bit overbought, and you want to take that gain. So that's the difference between TradeFinder, where we just find case study considerations and then you're kind of on your own, versus the alert service. So go to ewotrader.com if you're interested in the alert service, so that you can get these alerts on entries, exits, and any adjustments in between. All right, so coming back to where we are with our chart, see if we can find a case study consideration for tonight. And I come over here to scanners and pre-computed scans. The software allows you to program your own searches if you'd like to, and then you can run those searches. The pre-computed ones are instantaneous, so you don't have to wait for it to run the search to get the results. They're just boom, right there. And you can see these ones here that say EWO on them. Those are mine. So the folks at Hub that create this software were kind enough to add those searches in. So anyone that has the alert service and has the software gets to see my searches. You can see my results. You can see what I'm doing every single day, which is looking at these results. Now, note there's only one, which is interesting, isn't it? Because with the market kind of creeping higher, might have thought there was more, but there's only one, and it's RGEN. So let's take a look and see what that chart looks like. And that's based off of my favorite confirming indicators, the DMI, the CCI, CMF, moving averages, volume, some of those things. And gosh, that does look pretty good. Wow, even though we only have one result. The negative here, and so this is kind of what we're talking about earlier. The negative is that we had, call it the 38.2% wave 4 correction, which means you look for a 61.8% extension. Well, that's where we went. And we went there back on the 26th of January, backed off, came down, tested the wave 3 high, which is also not far away from the support at 180. We didn't quite make it down there, but we did come down and test this wave 3 high. So we came down, tested that here, and that was on the 1st of February, and moved back to the upside. So now we're back in this tap box again, and we're at 200. This is another one of the examples of that big round number. Just drew it to it, and then it acted as resistance. And now it's like, we might not be done yet. Maybe we want to go further. Maybe we want to have an extended wave 5. We want to go past this 61.8% extension. Maybe we want to go to 100% extension. So when you see that, and again, it's already done what it was supposed to do, but could it extend further to the next fib level? That's where I put a lot of weight in the DMI. Let's see what that looks like, because it gives us an idea of strength, especially when we're breaking above resistance. We're at a resistance at 200 in the wave 5 projection. And when you look at the DMI, it's hard to look better or more constructive than that. We have the positive directional indicator moving up, the negative moving down. There's good separation between the two. The ADX is moving up. It's between the two directional indicators, and it's above both 20 and 25. I like 20. It's slightly more aggressive, but 25 is what's talked about oftentimes along with the DMI as a signal. I think that's slightly too conservative. I think you missed some of the move if you only want to see it break above the 25 level from 20 to 25. Most of the time, if it breaks above 20, now it has to break above 20 because oftentimes it'll come up to 20, look like it's going to break, and then roll over. But if it actually breaks up above 20, the ADX I'm talking about, more often than not, it's going to break 25 as well. So why not just try to get in a little bit early, and maybe you can catch a little more of the move, or you can get a big spike and get out before it even hits your target, which we've done a few times. And when I look at that chart, gosh, that's a good looking chart. The DMI is telling us we think we are going to break above 200 here. Yeah, turn it back once, but here we are again, and we closed at 252. Not 252, 200.52 today. So we're right there at the 200 level. The DMI suggests that we're going to continue higher, which looks like we may have an extended wave 5. So that's going to be our case study consideration for tonight. So we'll go ahead and write that down. So on the 6th of February, we're going to look at RGEN. So next week, when we look at our what will be considered open case study considerations, we're going to only have 2 to look at. We'll see if PFG can get its act together. If rates pull back down, then I think the financials catch a bid, as I said. that might be a little far off. So might have to be a little patient on PFG as the economic data continues to come in strongly. But it looks like RGEN wants to go higher up towards that 100% extension, the fib extension. And with the DMI being as supportive as it is, I think it has a pretty good chance to do it. So even though we had one result to look at on that search, it turned out to be a really good one. See how much time that saves you? There's one result there. You don't have to go through pages and pages. I remember when I first started trading, I would do that. You look through chart after chart. It was so time consuming to do that rather than just click a button and get the results of whatever your favorite indicators are. You don't have to look at the same ones I do. But if you have your favorite indicators, you can create a search on those and see what the results are there and save yourself time as well. So you can program in your own searches. You can look at the pre-computed ones, whatever you want to do. But tremendous time saver. The software is, as well as being pretty darn accurate from an Elliott Wave standpoint. So I like that one. Let's see if it can continue to go higher. If you're wondering where the stop would be, I think you even have to be comfortable if it were to come back down, even in test 180. I don't think it does that if it is going to go higher. I think if it comes down here and breaks, gets to 180, it's probably going to break 180 and then head lower and might even be a bearish trade at that standpoint. But it's done a beautiful test here of the break of that wave 3 high, the DMI constructive. So no guarantees. Nothing's 100%. That one sets up pretty well. We'll see how it plays out. But you do have to keep in the back of your mind that it's done what it was supposed to do. What we're looking for now is an extended level. So we're stretching it a little bit, but the confirming indicators are telling us there's still strength of the move, and that's likely to happen. All right. So with that, Zach, how about that? Right on time. We'll open it up to a few questions if there are any.
Absolutely. Well done there, sir. Another great presentation. We'll get right into as many questions as we can. So first off, let's go over to CQQQ. I think that's the China ETF for Will.
The China technology one. And I do think if you're trying to find a place, if you're getting a little bit nervous with our market and how far can it run, and then we see data like what we saw today, how much more can a consumer spend? Probably not a whole lot more, you wouldn't think. And you're looking for underperforming places. That's what market rotation is. The big money starts to see, okay, what's underperformed? We know what's performed well, the Mag 7. We're tired of hearing about it, right? We know those stocks. We know they're doing well. What's not doing so well? What has been left behind? And China's stocks certainly have been, but they are going to get their act together at some point in time. Even though that's a wave 3 to the downside, at least we need to have a wave 4 at some point. So if you're just looking for a bounce, and in this interesting that where that wave 4 projection is, again, it hasn't labeled a wave 4 yet, but if we are indeed bouncing in the wave 4, it happens to coincide exactly with the resistance level there at 36. So if you were looking for something, a place, on one hand, you might say this is a little aggressive because China's been performing so poorly in the markets. But on the other side of the coin, they've been underperforming, and you're probably not going to be alone as far as money going to chase moves like that. So I really like this, at least for a bounce up towards that resistance at 36 and that wave 4. Not saying it's going to take off and run forever, but maybe a bit of an oversold bounce is in order here. Let's see where the 10-day moving average is. And we closed above it. So I would think you may have a little bit more to go to the upside on this one, but good way to start.
Absolutely. And to continue on that trend, let's go over to NVIDIA.
You can't help yourself, can you, Zach?
Hey, I'm giving the people what they want. That's
Uh-huh.
all I'm doing.
Yeah. Yeah. What do you bribe these guys with to please ask for NVIDIA for me?
Great minds think alike, apparently.
Well, that's just been a heck of a run. You have to wonder if this is getting a little bit like a blow off top, We had some good consolidation. We took off again. I thought 600 was going to be it. I was way off. We went to 700. We went a whole another 100 points. I didn't necessarily see that big of a move coming, but now you can see the ADX is getting pretty high. It's getting near 60, which is about as high as it goes. It's kind of interesting. I'd like to ask Wells Wilder that the range on the DMI for the ADX is 0 to 100, but you hardly ever see the ADX go above 60. So why is the range 0 to 100 when it rarely goes above 60? So it is an extended ADX. It's telling you that was a very strong move. So it doesn't necessarily mean that we're going to have some sort of a significant correction here. We could have a little bit, maybe give that vertical part back. Maybe we come back down to 600 there. It wouldn't surprise me. That's getting in the neighborhood of where the wave 4 projection is. The positive directional indicator is ticked down. It's below the ADX. You can see a little bit of a sneak up there in the negative directional indicator. So perhaps NVIDIA finally is starting to get a little tired and maybe needs to do a little backing and filling here to consolidate that big run from 480 to 700. I know you don't want to hear that, Zach, but maybe the party's over for a little while, at least on NVIDIA. Nothing goes up forever.
I mean, yeah, it seems like it has to be, right? I mean, you hit it spot on right there. Nothing does go up forever. So who knows? But this chart continues to surprise me. All right, let's move on to
Well,
the
what do
next
I know?
one.
I was only 100 points off on this.
I mean, who would have called that chart? So Meli, Meli for Rajiv.
Oh, this gosh, I used to trade this all the time. It was so volatile. You could have so much fun trading this years ago. Mercado Libre, and it would run like a scalded rabbit. I mean, it was amazing how much this stock would move, and it still moves pretty well. You can see where it's trading at what 17, right at 1710 is where it closed today. It touched the 30-day moving average. Now I don't have the 30-day moving average on there as I think it's any sort of significant point of support or resistance. I have it on there along with the 10-day moving average because past market makers told me that a lot of floor traders look at that. They watch when the 10 and 30 cross. If the 10 crosses above the 30, normally you have a little bit of a bullish trend starting. If the 10 crosses back below 30, then perhaps you have a downward move. Notice how we had a little correction here, but the 10 never crossed below the 30 there. And then off we went again. And now we've come back down and we've tested it. Again, I think it's just kind of coincidence that the low hit the 30-day moving average. But this one looks a little bit tired. And note that the ADX just kind of went, it ran out of steam here. You wouldn't want to see that. If we're going to continue higher from here after a move like this, you would want to see another peak like this where the ADX is saying there's more to go, there's more strength to come. I think this one looks a little tired as well, and perhaps it needs to come down and rest a little bit. Once again, doesn't necessarily mean that we're going to have any sort of significant move lower, but perhaps at least a test of that wave 3 high down there around what 1640 maybe. um, Anything can happen. It can change and go back up, and the DMI can get re-energized and give it some follow through to the upside. But for now, it looks like it wants to rest a bit to me.
All right, that's a wrap. Now let's go over to wrap.
To what?
Wrap. WRAP for Bill.
I thought that's what you said, but I was like, wow. I don't know what happened yesterday. I don't know if that is a bad quote. Sometimes the exchanges have bad data, or if that was legit and it opened at 7 and closed at 4 yesterday. That seems awfully extreme. It looks more like this wants to continue to try to crawl higher. Now, if it can make it to 5, then it will gain some institutional interest, at least from those that have aggressive growth as their investment objective. Remember the numbers 5 and 10. If you stocks trading above 10, any investment company that has growth and income, anything growth minded can own those stocks. But when you get below 10 and you're in the single digits, then you have to be aggressive growth minded. And below 5, you're just kind of hoping if it's a stock you follow or a company you follow, you want to see it get above 5 so we can get some of the big money, so we can attract some institutional interest. This seems on track to do that. This just looks really weird to me on that bar. I feel more like that was just a bad data quote. And so it's going to kind of throw the DMI off a little bit. But the ADX, even before that, was rising on this move. So it was showing some strength. If you have just some speculative money laying around and you wanted to try to, because what will happen is if it can get above 5 and attract some institutional money, you'll see some pretty big bars with decent volume behind it. But it's got to get there first, and we're a ways away. We're only at 4, but I would keep an eye on this one and see if it can continue this march and break above 5. Then you might really have something going. You can see that the algorithm, for whatever reason, likes that price around 8.5, and I could see that if it can break above 5. So it's got to break above 5 first, but if it does, I don't think that 8.5 level is out of the question.
Very well.
Interesting one to look at. It's
Yeah, it's
certainly
just
not a common one.
took the words out of my mouth. I was just going to say the same thing. And real quickly, I just want to take a moment to ask everyone to go ahead and smash that like button if you're enjoying the webinar so far. It goes a long way for the channel and the algorithm, everything that goes and aligns with that. And so Rob and I greatly appreciate it. So with that, let's go on to RUM.
Yeah, thanks for that comment, Zach. You young people with the smash the like button. I know that's the phrase that's become, don't break your computer. And we would appreciate you hitting the like button, but no need to break the keyboard doing it. Just a nice little tap would be okay. We don't have to smash it, but I know that's the lingo
Just
that
all the
everybody
passion.
uses. Now I've completely forgot what stock you want me to look at. What do you want me to look at?
I got two here for you from Manuel on YouTube. First one is RUM.
RUM. How could I forget that? Um, So Rumble and uh, really impressive move to the upside here. And you can see clearly this is the power of that 5 level. Obviously, there was institutional ownership here. It meandered around 5 for a while, and everybody was like, okay. Then it started to break below it. And what has to happen then is the institutions that own it either need to come in and support it or they bail. So once this starts to happen, you either get a significant move higher or lower. And in this case, the institution said, no, we like the story and we're going to come in and support it. And you got this nice move. And what ends up happening is you create short covering. So they come in and they buy, and then the shorts have to cover, and you get these big bars to the upside. Now the question becomes, how much further can it go? Because it's made a pretty nice run there. And we have resistance, gosh, right where we are now. Is that we're right there? Yeah, at 8. It isn't a 5 wave to the downside pattern, but just barely. We're right there at 70% on the extension. You've probably heard me say before that Elliott admitted 78.6 is the official level because that's a fib level, but he didn't like to see these corrective levels get to 70% because he felt most of the time they moved to 78.6. Well, if you're bullish on this stock, that's what you want. You want it to continue higher up to the 78.6% level. And there's more resistance up here at 9. This stock has a tough row to hoe here. So we've got resistance there at 8, then we have more at 9, and then 10. Now, if it could some way find a way to get above 10, you're going to see another one of these. It'll do that again if it can get above 10. But it's at 8 now, so it's got a little ways to go. And I use the same phrase, tough row to hoe here because it's got a lot of resistance ahead of it. So that was the easy move there off of the low up to here. But can it get above 8 and then 9 and then 10? That's going to be harder. I don't think you're going to continue to see this, but maybe. I do think that maybe it calms down a bit, but if it can crawl up there and get above 10, then again, I think you could see another one of these big moves like it had from 4 to 8. Now, what was the
Hey,
second one?
second one is going to be SPOT.
Good old Spotify. And you can see that looked like it was going to be a good start to the day, and then back down we came. Um, but still ended up closing nicely to the upside and tiny bit overbought, but nowhere near where we were on the on the high of the day, the open as well, but the high of the day. Was that an earnings report? Did they have earnings? Is that what caused that? Um, no, they just have some good news today. I didn't see the news on Spotify today, so I'm not sure exactly what happened there, but something that people liked, even though it pulled back, it got really extended from the 10-day moving average on the high, so it pulled back a bit, but still a nice up day. $8 to 67 cents to the upside there, and the DMI is confirming that that's really strong. You saw that the ADX can make it all the way up to 60. We are breaking above 40, which bears watching. Oftentimes, when it breaks above 40, it's telling you the strongest part of the move is over. It doesn't mean the entire move is over, it just means the strongest part is over. Stocks can still go higher with a really high ADX, but you just have to be a little more cautious. Was that is that a earnings? It is earnings. So it was an earnings report. Okay, so that makes more sense. So how much more can it go? It feels like that one may want to consolidate this gap up, but maybe not because it pulled back quite a bit. Um, if if it could give you a test down here of 220, I think that would be a good speculative entry. It may not do that though because it came back a lot already. So it may not give you that opportunity. It may just kind of turn around and go back up tomorrow. But the DMI is saying there's strength behind this. So I do think you see Spotify at a higher price level. Whether or not it needs a little time to digest what happened today or not, we'll have to wait and see. But I do think you'll see Spotify higher in the not too distant future.
Yeah, that's funny. I was gonna say it's misleading there. You can barely see the earnings right under the wave three. Just so happens to be in that perfect location there. But
Yep.
anyhow, I see we are a minute after time, so we all appreciate your time and sharing your insight and analysis. So we got time for maybe one more for this evening.
Sure. Let's do one more.
All right. Well, seems to be some demand around NYCB. So let's finish on that
NYCB.
one. NYCB, correct.
Yeah, that was a community bank that had some bad news and um, kind of a rough day today, as you can see to the downside. Um, it was trying to hold right here around this sixth level, right in this area, to see if it could perhaps bounce, and it's continued lower. It's getting a bit oversold now. The interest rate environment's not helping there either. It's going to be real interesting to see if we get follow through on this. So it's consolidating nicely at 6. Does it bounce back up and test it, or do we follow through lower? That would be pretty ugly. I know this has a lot of institutional ownership. You can see it was trading at and around 10 for a long time. Now we get to find out if those people are willing to come in and support it, and you see something like you saw on Rumble. Do we turn and get a nice move back to the upside, or are they just going to bail on it and the stock's headed for the pink sheets? It's too early to tell, but we'll be watching to see what kind of follow through happens tomorrow. It's oversold now with the close today. Does it turn and come back up, or is that it? And it's not quite a Katie bar the door, Zach, because it doesn't have that much lower to go, but it's in real danger of moving off the exchange to the pink sheets. But we'll just have to see what those that are holding the stock, how they feel about it. If they have some confidence in it, they'll likely come in and support this. If not, then it's probably not looking too good for it. But tomorrow I'll tell a lot on that one.
All right. Did you
I
want
didn't
to
know
keep
didn't know if you were
going or?
I didn't know if you were still with me or not. No, so thanks everybody. As Zach said, we appreciate your attention. What I say, and I'm really sincere about this, is that we value your valuable time, and we appreciate when you spend it with us. And so, therefore, we do our best to make it informative and educational. So, thanks so much for tuning in tonight, and hope you have a great rest of your week. And look forward to talking to you again next week.